Copper and palladium hitting all-time record highs. Gold's on its way seemingly to a new record, levels not seen since post-COVID back in August 2020. We also got gains in other metals as well in today's session. What's it mean for the miners as we see a continuation of the conflict and war in Ukraine? John Meyer joins us now from SP Angel. John, welcome. I want to start off by saying, of course, and reminding people that nobody benefits from war. Prices do rise, of course, and that's what we're looking at today. But one must be mindful of the tragic human consequences of what's going on. But steering around that, taking a look at what we're here to discuss and this rise in metals prices. But we already knew going into the conflict that metals prices were rising. Just remind us about what the dynamics are and what's happened to accelerate this rise in prices.
Well, Russia is a reasonable size exporter of many of these metals. It's big in nickel, palladium. It produces a certain amount of, well, it exports about 4% of its copper, for example. And there's a variety of other things, vanadium, other alloys. Quite a lot of specialist materials have come out of Russia over the years. They're quite a big exporter of aluminium, which they produce using hydropower, for example. As is done in many parts of the world. And with the imposition of so many sanctions, with problems with trade financing for Russian banks and for traders who trade with Russia, there is this very substantial disruption in global markets in the movement of these metals. And you know that's going to be problematic for some European manufacturers, certainly. And this is what's causing prices to rise as manufacturers scramble to find physical metal from elsewhere, and traders who may have short positions, particularly in nickel, have been scrambling to close those positions.
As an analyst, you often look at balance sheets, profit and loss accounts, and so forth. And you've got a number of mining clients that will see all this sort of thing happen. How much does this help offset, if that's the right way of putting it, the rising input costs that we've got? Because we've got energy prices rising again. Energy was rising going into this conflict. It's now taken off. Clearly, miners have to deal with that side of things as well. What's the balance going to be like looking at in terms of earnings over the next few quarters?
Energy traditionally was around 30% of input costs, or we would say around a third. In fact, I think over time that has reduced because miners have become more energy efficient. Trucks are much more fuel efficient. Processing plants are generally hooked up to electricity supplies, that sort of thing. So we don't see energy as inflationary as it used to be, but it is still inflationary, and it's a major factor. And of course, labor rates are going to go up. All the other bits and pieces involved in the running of a mine are going to go up in cost terms. But the metals prices are, I think, running ahead of that. So miners will probably continue to see increased margins unless, of course, metals prices pull back. Now, we are concerned that that global GDP will pull back on higher fuel and energy prices. Certainly, the disruption is not going to help. And the Chinese government has pulled back their GDP growth forecasts over the weekend at their 13th NPC, I think it's National People's Congress, to 5.5%. Still a very, very big growth rate for an economy of the scale of China these days. So we're not overly concerned about that. But yes, I mean, the disruption is going to be a bit difficult. Ultimately, that might cause some drop in consumption. But for now, metals prices are still moving higher.
Without getting too deeply involved in the political and the analytical side of this from a political angle, I do want to pick up on your point about the 13th National People's Congress in China. One of its spokesmen I was reading in the last 4 or 5 hours or so is defending, or rather not defending the actions of Russia, but defending China's relationship with Russia, talking about the everlasting friendship the country has got. What sort of pressures now are building on China? One, because of the rise in input costs. Of course, China is a big user of energy itself. It does produce some of it, of course, it's its own. But of course, with this rise in prices, rising capex costs generally, do you see this as a, not to want to put too much of an emphasis on this, but an opportunity for China to take market share? In other words, take up some of the slack that Russia is now leaving behind it because it's now so focused on what's happening in Ukraine.
Yeah, when I saw the statement coming out of China, I thought, well, words are cheap. And we know that we shouldn't trust what the Chinese have to say a lot of the time. So on the one hand, they're saying they're friends with Russia. On the other hand, they've also refused to endorse Russia's move on the Ukraine. And that was a bit of a surprise, actually. Now, we suspect that China will continue to bust sanctions, or shall we say, not join into the Western sanctions. Yes, they will surely benefit from Russia being isolated from much of the world. For example, mining equipment that's quite often bought from Russia, ball mills, motors, all sorts of heavy equipment, will have to be sourced elsewhere, and the Chinese will be more than happy to step up and possibly raise their prices at the same time, while also enjoying discounts on metals, oil and gas out of China that is heading their way. So China is in a win-win situation here, whilst Russia will suffer. Now, it remains to be seen whether China can be persuaded to actually turn against Russia. It's difficult to anticipate how they might go on this. China needs the West. It needs the West to enjoy some sort of growth in order to sell products into the West. If the West stops buying Chinese products, then it has a huge problem to work with. And what we see is actually the Chinese state has authorized more cash and more liberalization of the Chinese property development market. And I wonder if that's a bit of a preemptive move to try to shore up things back home, and maybe even push a bit towards the dual circulation policy, which is about driving internal consumption of fridges, freezers, washing machines, stuff like that. And we'll wait and see, but it will be interesting to see what else comes out of this 13th National People's Congress in China.
Just to pick up on the point you talking there about Chinese output of manufactured goods, something else you mentioned in your morning note this morning from SP Angel is the fact that the electric vehicle production has dipped. Now, we were, I guess, partially expecting this because of the Lunar New Year. It's that time of year when Chinese manufacturers do tend to ease back a little bit. So I guess to some degree, that's no real surprise. I don't know if you're witnessing any other evidence of any slowdown, but I'm also going to tie this question in to ask about that. Also to talk about some of the rise in metals prices. Let me just show you a couple of charts, actually, John, because I want to quickly run through these just to show what's happening in terms of the context. This is nickel. Now, this is up a whopping 37% today. I want to show another chart where people will be familiar with what's been happening. Copper, it went above this 10,000 line really convincingly over the last week or so. We've seen three really strong candles since then, and it's gone above this previous record, 107.46 in today's session, and is now above that point as well. So some of these metals that are used in electric vehicles are rising. What do you think all this is going to do? I mean, lithium prices are up, and we know that other metals prices, cobalt, some of the things that we see used in batteries and so forth, and the processes involved in getting electric vehicles to the road. How do you see all this helping or possibly even hampering this idea that we should all now be buying electric vehicles? I think one analyst was saying this morning, Elon Musk, his dreams of bringing what he hopes to be cheaper and cheaper electric vehicles to the market is now right out the window. What are your thoughts on all that?
I think this is more down to the reduction in subsidies in China, and what happens with subsidies is it accelerates sales up until the point where those subsidies end. And then the market has to kind of figure out how to adjust to selling vehicles at higher prices. And I'm sure the market will adjust, particularly because fuel prices, petrol and diesel prices are so much higher now, and they're going to be higher in China as well. So electric vehicles look very much more attractive than they did. If you think you can fill a tank effectively in an electric vehicle for around 10p, but it's going to cost you 50 or 60 quid in the average gasoline vehicle, or somewhat more than that now, maybe 80 to 100. So the economics are very much better. I think the car manufacturers are going to focus more and more on the electric vehicles. Yes, they are going to have issues buying their nickel, buying the lithium, and the cobalt and other bits and pieces. And the battery factories can adjust the chemistry of the batteries that they're making. And I won't go into the technicalities of all that right now. But there are quite a lot of options, and they all produce quite good batteries. It's a question of the European manufacturers tend to go for the 622 or 811 because they've got they're higher power, more performance. The Chinese guys are going for the LFP, lithium phosphate, because that's a cheaper battery to make from a raw materials perspective, but doesn't give you such great performance. At the end of the day, I think they're going to focus on producing more of these cars, and they will also focus on how to sell us more of these cars. And what might happen is we'll get more cheap finance deals to enable us to buy these cars more easily, and then we will enjoy cheaper motoring without having to buy Russian oil and gas. So I think this is a bit of a win-win all round, and I've never really thought that the cost of electric vehicles was going to come down that much, because at the end of the day, particularly the European and US manufacturers are going to have to pay for the capital costs of building all these new electric vehicle plants. And I think they're the guys who are going to want to take the profit out of that. In the meantime, we will still benefit from having cheaper per mile driving.
Just one final question, John. I want to go back to the price rise in metals. One interesting dynamic that goes on in the mining industry, when prices rise, there's an opportunity, I know, for companies that may already be around, but other companies possibly to see opportunities in bringing metals out from the ground in other parts of the world that would otherwise not be economic to do it. When you see this big rise in nickel and copper and so forth, it must presumably economically bring on more mines. So do you see that as being one of the themes this year? Do you see that explorers have got some rabbits up their sleeves they're now got to pull out because the time is right to try and bring on some of these expensive mines that might otherwise not ever actually see the light of day because they're just too costly to bring online? Do you see more copper and more nickel and more base metals coming onto the market because of this going on?
Yes, there are, but it takes time, because we've been looking for new nickel projects for 10 years, and we tried to raise money for a Brazilian nickel some 6-7 years ago, and nobody was interested. Now, of course, lots of investors are interested in that kind of thing. The nickel price has clearly gone up lots, and projects that were marginal and could not see finance over the last 5 to 10 years are now very much in vogue and seeing offers of finance from very major investors and proactive groups, and even government money being funneled into these things. We've got a list of 6 or 7 tin projects, for example. I mean, some of which won't see the light of day, but some others will. And again, on the nickel side of things, we've got projects coming to us now that weren't being previously considered that are now coming through for financing, and that's actually good news. I mean, it will take some years. It might take 3-5 years, sometimes longer, to get these things up and running, but they will come through, and the world will not end.
Okay, John, let's leave it on a plus note there. Thanks indeed for joining us. John Meyer, partner and mining analyst at SP Angel, with his thoughts on what's happening in the metals industry at the moment. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.